In today's video, I'm going to be going over whether or not the economy feels like it's strong or good, what this means for young people, and things that people in their 20s should be doing. So first off, is the economy doing well? Well, this is probably something that's been brought up, maybe something that you've been learning about within the stock market, how companies make money. And well, at this point on paper, seems like the economy is doing pretty good. The S&P 500, you can take a look for yourself, is at an all-time high. However, this is very contrary to what is being talked about in social circles that you might have. As you know, as a young person, and really for anyone living in this world, day and age, it's become a place where inflation's going up. Things seem to keep getting more expensive, and it seems like your job's not keeping up. Every headline says that the economy is strong, unemployment is low, stocks are up, GDP is high. But if you're a young person, it probably doesn't feel strong at all. Rent is high, groceries are expensive right now. Getting ahead just feels harder than ever. So how can the economy be so strong yet be so hard on younger people? When the media says that the economy is doing well, it usually means a few things. That unemployment is low, that companies are making money, consumers are still spending, and that financial markets are doing well. And technically, those things can all be true at the same time. But here's the real disconnect. Those indicators and numbers, they don't really show us who the economy is working for. And a strong economy doesn't necessarily mean an easy economy. For example, just take a look at the unemployment rate. You can just see for yourself, it's lingering at about 4.4%. This is lower historically, but for a lot of us, it's not really feeling that way. I'm sure you can tell whatever job it is, whether or not you're graduated from college. Um, if you have a job, it might seem like your jobs are on the fence, or you might even be underemployed. And if you're young, you usually have three things working against you. You don't own assets yet, your income is still growing, and most of your expenses still goes to your necessities. And that combination just makes your situation that much more sensitive to when prices go up. Probably the last couple of years, you've probably seen your wages go up. With the economy, you probably noticed that prices went up first and then your wages followed. And as of this year, they've kind of stalled. You can check out the Fed's report. And in many cases, the prices went up even faster than whatever you got. So even if your paycheck is bigger than it was a couple of years ago, most likely the way things have been going, purchasing power is probably down. Someone like me actually might be making less even though the numbers have been going up. That's why you might hear in passing people be saying that even though they make more money, they still feel like they're poor. And look, I'm telling you, that's the part that really matters. When prices goes up, people that benefit the most are those with established assets, properties, things that they own. And people who don't own assets just pay higher prices. Young people are far more likely to be renters, not owners. So really the economy works for what you own, not really how hard you're working. And that's not kind of some moral statement. That's just how the system works. Unfortunately, if you're someone who wants to see the ideal compensation for your work, it's hard to say. It just, in the system we live in, it's very unlikely that's going to happen. So we kind of end up where we're at the beginning of 2026, but cost to entry, even for yourself to get a job into the market, just keeps getting more expensive. Costs more to go to school, costs more to get a job or even get the experience you need. And I'm not going to lie, it can be exhausting for someone that's building from zero, right? But overall, I do have to say that doesn't mean the economy's fake. It doesn't mean that the numbers are lying. It just means that the system works a certain way. And in today's day and age, someone with no assets is going to be left behind unless they do something to become owners. So overall, what you should do, kind of things that I've been learning, and things that whatever job that is, wherever part of life you're at, whether that's school, starting your job, or if you're well established in some trade, I would say is just setting aside some cash or money and being able to put that back into the market and growing your assets little by little. And the sooner you start, the better equipped you're going to be. And really, if you're not doing that, well, it's just, I don't want to say you're going to be left behind, but overall, that's what's going to happen to a lot of people. And look, if you're someone or the type of person that's betting on some silver bullet to come your way, to fix things, maybe for a price growth, for a pay growth, that might happen here or there, but overall, the trend shows that probably something that's not going to come. And wherever you are, however much you're making, really it's time to save yourself, be financially responsible, and figure out how you're going to get to the point where you don't need to rely on your work anymore. Because at this point, relying on an employer is something that's hitting a lot of people, something that takes a lot of work, and something that can be fixed through a lot of time and years, but something that's worth it. Hope you're doing okay and have a good one.